The federal government has allocated approximately 4.83 trillion naira from the proceeds of Nigerian Treasury bills, NTBs, and bonds issued in 2040 to settle the Ways and Means advances from the Central Bank of Nigeria, CBN. Now, this is according to the Minister of Finance and Coordinating Minister of the Economy, Wale Edun. Similarly, the CBN issued a total of 28 different exchange rates for import duties in the first quarter of 2024, while January saw a single stable rate. Businesses navigated a staggering 15 different exchange rates in February and 13 in March. Now, joining me for more on this is the Chief Economist at SPM Professionals, Paul Alaje. Thank you, Paul, for joining me today.
Thank you so very much for having me.
All right, so let me begin by getting your thoughts on this report, which says that the federal government has allocated approximately 4.83 trillion naira from the proceeds of NTBs and bonds issued in 2024 to settle Ways and Means advances from CBN. What are your thoughts on this?
Well, we have continued the way of borrowings, and if you look at the 2024 budget, the single largest component of that budget is not what we are going to spend on security. It is not what we will spend on education. It is even not what we will spend on health. The single largest item in 2024 budget is debt service. And I didn't say debt repayment, it's debt service. So part of those money is what you have seen that have been mentioned by the Minister of Budget and National Coordinating Minister of the Economy, that Nigeria will be spending that humongous amount on servicing and perhaps some of the Treasury bills, bonds we've collected, as well as what we should pay to the Central Bank of Nigeria in terms of Ways and Means. In the coming period, it is expected that we might even be paying more. I have projected last year, December, that Nigeria's debt profile will climb up to 100 trillion naira by the end of this year, 2024. The interesting thing is that by the end of second quarter, no longer fourth quarter, Nigeria will certainly get to 100 trillion naira mark of debt exposure, both local and international debt or foreign debt, as you like, that Nigeria will now be owing. I think this amount is humongous, not just because, to mention the amount, I think it's huge. One, because of the reality of our revenue today. After removing fuel subsidy and devaluing the naira, taking the two steps together, it has implication. The first implication is that revenue line to government increased sporadically, but this increase also had implication on our debt profile. If you are using 800 or 1,000, as the case may be, whatever is reported by the Debt Management Office, it's also accountable for over 1 trillion naira increase in our debt profile. So we now need to service. Where are we going to get the money from? Is the money for service going to come from naira or the dollar? I think the former is the answer, which means we're going to be using the naira to service our debt. And that money is getting even more scarce as our sources of revenue is reducing. Thankfully, Mr. President removed subsidy, and the implication of subsidy is more money. But will this more money be enough to take us out of the woods in the light of humongous foreign debt and huge local debt, including exposure to the Central Bank of Nigeria by ways and means which our government have already collected, even the past government, including what this government have collected. Recall that whatever this government is paying is not just what they borrow, even what the previous government administration have borrowed. Servicing is very important for us to remain credible country when it comes to application for loans or selling our bonds or bills to the member of public or international community.
All right, I like your talk, talking about how that we need to look at what these loans are even expended on when you talked about the budget and all of that. But add to that, the government's borrowing of 2.94 trillion naira from the CBN through the same Ways and Means, in the latter half of 2023 for servicing of its domestic debts, even as the current finance minister had earlier stated that the president would adhere to the statutory limit. So what percentage of the government's revenue is 2.94 trillion naira, if I may ask? Because we know initially it was 5% until the National Assembly, adjusted it upwards. So if we're looking at, even if we're going to look at the 15% adjustment, does that, is that what we see here?
Well, government, the adjustment is 15% by the National Assembly. The 8th Assembly has moved that. Now, what we see is whether 2.4 is equivalent of our revenue. Now, it is not revenue projection for this year. It is actual revenue for last year. So 15% of what we got last year is certainly not up to 2.4 trillion. And this is where you need civil society to question and constitutional lawyer to ask questions. Unfortunately, the field of economy seems to be lonely in this regard. If we must collect up to 2.4 trillion naira, we are saying that we have generated in revenue far more than that. I know that we didn't even generate up to 24 trillion, if you want to talk about 24 trillion. Even the budget for last year is not up to 24 trillion. So asking for 2.4 trillion in ways and means, when we in fact generated less than, if you like, 30 trillion naira, or I beg your pardon, when we in fact generated far lower than 10% of that. I mean, 10% of it is not up to 2.4 trillion. So why should we be doing that? We just have to be careful so that we don't find ourselves in the ways of the past where we didn't have up to the amount we collected from ways and means went beyond half of previous year's revenue. Now, it took the National Assembly to help to correct the abnormality that took place between the central bank and the federal government of Nigeria. My concern here is, could it mean that we're about to start committing another financial mistakes by asking for 2.4 trillion when we know it's not up to 15%, when we know that 15% of what we generated last year is far below this. So I want to strongly believe that what we generated last year in revenue is not up to, if you like, 15 trillion naira. So if you do not generate up to 20 trillion naira, I beg your pardon, then why should we be asking for that huge amount of money? Because even if it's 20 trillion, you are 10% of it is just 2 trillion naira. So if you had then 2.5 trillion, but what we generated is not up to 21 trillion, then why should we be interested in collecting this amount of money? I believe authority speak directly to this information.
Okay, looking at this particular conversation, I mean, it's a two-way street in that on the one hand, you can say that we are attracting foreign inflows, we have foreign portfolio investors. But then looking at this, I remember what the minister said at a breakfast meeting, and he was saying that the government strategy of increasing the pricing of government securities has successfully attracted dollar inflows, but at a higher cost to the government. Now, how high is that cost, and what are the ramifications?
It's not just the higher cost to government that matters. It's also higher cost for local investor. It's higher cost for employment. It's higher cost for our growth. It is true that when NPR, this is the connection. When you increase NPR, that's monetary policy rate, government has buffer to increase window for borrowings, which certainly is what we have seen. And more investors local and abroad are coming to Nigeria, even though what we are seeing is still not up to what we expect to have as a nation and as a need. But the implications on domestic economy, which should be your concern. Nigerians that are watching this or that will watch this in future, they may say, how will this concern me? It will concern you. One, investors that want to invest in Nigeria and our local business people that want to invest, they would rather like to put their money with government at no stress, no cost, because government is going to pay higher return than to put the money in construction, where they will employ Dende from Kano or Ibrahim from Sokoto, or bringing Idowu from Ibadan, or bringing someone from Chinedu, from Inewi, or bring them on board. No, I would rather give my money to government in the name of Treasury bill and bonds, because the rates are high. When the rates are not high, people will prefer to put their money in real business and get people to work. Now, when this is not happening, when people are not going to work and people are not working as expected, what you are going to see is that if persists and interest rates keep going up, then you're going to see people, the economy might be thrown back into a recession of some sort. I'm not saying that will happen in the short term, but if this persists, you have seen 400 basis point increase from 18.75 to 22.75%. That's NPR increase. You have now seen another 200 basis points from 22.75 to 24.75. And this happened within 4 to 5 weeks. If this repeats itself, then I can tell you, by Nigeria escape 2024, then by second quarter 2025, if this rate increase, look at the condition. If we continue to increase rates in this manner, then Nigeria may eventually have zero growth. And if the care is not taken, we might go into a recession. Even now, if we have major distortion in the global economy, externalities may affect us, because already they said it is incentive to investing in real sector.
Let me come in here. I like what you have said, but
the best of central bank is to combat inflation. All of these have implications in our fiscal life.
All right, let me come in here. I like what you've said, but we have other economists and other analysts who are saying that whatever, the CBN is doing, the monetary policy or the monetary authority is doing, on its own part is actually very good for the economy because they cannot sit down and watch, money supply go haywire and all of that. And then on the other hand, they are saying that, if you look at it again, you're going to see that we're ability to attract investors. Naira is becoming stable. Of course, foreign portfolio investors anyway. Naira is becoming stable and all of that. And they are saying that, look, this is not going to continue forever. That on the other hand, we have the fiscal authority who are doing a lot more, maybe in terms of agriculture. And we're also seeing some good news, even in the oil and gas sector, production and all of that. So they're saying, when you look at all of those things, the tightening policy isn't for forever. They are saying that maybe in the short term, yes, but, with time, they might just, losing things up. What do you make of that?
Economics projection is based on the happening today, not what we think the authorities will do. It is the action that you take today that will determine what will happen. Let me give you an instance. A central bank has not intervened in the market by determining the price of export and import and what is happening in I&E window, as well as selling directly to BDCs. Naira would have gotten worse. Before they started doing that, we projected Naira to get to 1,500. It happened. We projected it to progress further to 2,000. It got to 1,950. The central bank sat up and felt, no, we cannot continue this free flow, expecting that the market will adjust itself. So central bank intervened in the market. We are saying as of now, as of today, if this policy continues with what we have seen, I'm afraid it might not be what those analysts, because economics is not about wishful thinking. From your comments, they said they hope that in the future that they will stop. We cannot decide that until we have seen the policy statement. What we deal with in economics is the number. And
all
the
right.
action that is taken today will certainly have implication for tomorrow. So if truly maybe they've heard, or there is a circular central bank issue that we're only going to do this for 2 months, which I don't have access to, then they may be right. When they don't have, it will be too dangerous a thing as economists to assume or to base your policy on mere assumption of what there is no communication, document or anything to back it on. Then you would only be practicing a wishful thinking.
All right, Paul, just before we go, we need to go in about 30 seconds now. The DMO is usually, it's always quick to say that it's debt management tactics, is sort of, watertight and all of that. But looking at what looks like a cyclical borrowing strategy that sees, new debts being used to service existing obligations, shouldn't even the most optimistic be concerned? Isn't this a cycle that's going to continue? And then for how long can we sustain this? If you can take that in 30 seconds.
Well, I think that is beyond the purview of DMO. DMO's job is to find Nigerian debt and look at how to use policy to manage as much as possible, get possible best rates for Nigeria. That's what they need to do. In servicing, it is revenue generated from government, from Minister of Finance, that go to the debt management office. DMO directly cannot tell how much or how we finance our debts. They will only work with Minister of Finance as to how that will be done. Because that we have a minister who is the chief there. So the job of the minister is to ensure that the numbers are put together before the DMO could tell you whether the optimism will be correct or not. For me, the DMO person is doing our best in managing the process. But if we're not generating enough revenue, DMO has no influence in what's happening in Niger data. Is here. You mentioned optimism in terms of crude, but are you also aware that the tax level in our crude is historic right now? What we are seeing right now because of shortage or reduction in our while the price is going on. If output were to be maintained, then we can talk of more revenue. But if that is not the case, then we can still be talking of concerns that we will see.
Thank you so much, Paul Alaje. We just have to end this here. Thank you so much for your time. It's been a pleasure speaking with you today.
Thank you so much for having me.
The Nigeria-UK air route has witnessed a dramatic shift in pricing strategies sparked by the entry of Nigerian carrier Airpeace. The CEO of Airpeace, Ohunayo, has raised concerns over what he perceives as a concerted effort by foreign airlines to undercut his company's competitive position through aggressive price reductions. The situation has reignited discussions on the dynamics of price wars, competition, and the role of government support in the aviation industry. Well, joining me for more on this is the General Secretary of Aviation Roundtable, Olumide Ohunayo. Thank you so much for joining me, Mr. Ohunayo.
Thank you for having me and calling me out on the holidays.
Thank you, too. All right. Vindictive, conspiracy, competition, price war. I mean, I feel where one stands will ultimately determine how one sees this. What do you see?
Well, this all you have mentioned are real, and it's not unexpected. It's a normal thing in business. Everybody wants to stay in business to make profit. They want to sustain exploitation and then dominance. It's a normal business strategy. Nigerian airlines have been away on that route for about 7 to 8 years. The last time was with Medview Airlines of Nigeria. That was the last airline that went there. Since then, it's been total dominance by the British carriers.
Yeah, I like you to talk to us about how that happened. I mean, how did we get there? What happened really? Maybe we need to, circle back and go back to all of that.
Maybe we go historical. In the beginning, it was Nigerian Airways that was there representing Nigeria on the route. And then another airline comes from England, and that was British Airways. Along the line, during the early part of President Obasanjo, that bilateral service agreement was not changed to a dual designation, meaning that each country will have 2 airlines. And then the British brought in British Airways and Virgin Atlantic. And immediately they brought those 2, we have not been able to use that reciprocity clause in the bilateral service agreement to put 2 airlines there. So after that agreement, I think the first airline that used this was I think Bellevue had used it. Then Virgin Nigeria came on and used it. Air came on and used it. And the last time Nigerian airline was Medview Airlines before Airpeace just joined. So since the demise of Medview and withdrawal from that route, there has not been any Nigerian airline. So the British carriers, European carriers, and some African carriers like Egypt Air, Maroc, Rwandan Air, Ethiopian Airlines, and the Middle East Airlines of Qatar and Emirates have been feasting on that route and carrying majority of Nigerian passengers while we had no player. We are supposed to be there, and Airpeace just started. They have only taken 5 of the 21 slots that we have available to operate into London and Manchester. So there's still more spaces for them to expand.
All right, but the big deal for me really is what informed the previous pricing. I mean, going back to the pricing issue, which Onyema talked about, where these international airlines were charging between 5 million and 70 million for economy and business class, respectively. I mean, I remember how we talked about, Nigerians having to fly to neighboring countries. When they get there, then from there, they proceed to, these other countries. So looking at all of this, my concern is, doesn't this probably speak to arbitrary pricing before now? I mean, what culminated into that sort of amount that Nigerians used to pay for this?
Well, for airfares, all fares are deregulated. The days of regulation are gone. All the airline needs to do is to file those fares with the regulatory authority, which is the Nigerian Civil Aviation Authority, and they all do that. They are at liberty to fix the fares. And you also know that out of these fares, they pay taxes. But on the European routes, yes, there's been an exploitation. What has happened was that the 2 airlines, both Virgin Atlantic and BA, were totally benchmarking each other on fares and using that to find out which minimum base should they use. And that was the exploitation we're having, coupled with the withdrawal of Emirates Airline. Emirates an airline that don't carry people to Dubai, but carries people to points beyond Dubai. So because the carry people points beyond Dubai, that stoppage by Emirates also reduced capacity on that were available for Nigerians to travel, and that also helped in increasing the fare. Now, if Emirates, as promised, will be returning in July to join Airpeace on the international route with the seats they will provide, you can be sure that the fares will also go down a bit. We have more supply now.
Well, looking at that, so are you trying to say that, maybe Airpeace is crying foul, that this is just, forces of demand and supply, just general and normal competition we see in market?
Well, they are not. They are not crying foul. It's normal tactics and power play that you expect from bullies and those who feel they are on ground and they need to show their dominance. And this was expected to happen. It happened to Virgin Nigeria on the Lagos Dubai route. Emirates did the same thing. Virgin Nigeria had to run away after about operating for about a year. So, but in this case now, I would expect the government to see where they can come in to support Airpeace. I don't want to look at I don't want to say Allen or Yema, but look at how they can support Airpeace, because we're talking about the airline now, because it's the airline we have given the designation, we have given the power, we have given the flag to represent Nigeria. So it needs the necessary support. And I think this support can come in. We can start looking at taxes that we can waive during this period, during this student period. Incidentally, they have also gone to lease wetness aircraft so they could meet up with some of the schedules they have. So that shows that they're not taking that property. They're probably going to share with the lessor who gave them the aircraft. So there's a need for government to look at some areas they can come in through taxes and charges, and also probably help and see if they can get the tax on aviation fuel that will be supplied to them. Will come as a lesser fee, and also see that if some of the charges that are supposed to be paid at the international wing, if they can pay it in naira. These are the ways you can support your own. They are built to other airlines in their home country, and also, like what happened when on that first flight, there's the grandfather rights. The Nigerian airlines should have a finger. A part of the terminal that will be dedicated to Nigerian airlines. They are the home carriers, so they cannot be pushed aside and on their home soil. It is when you treat your carriers here that they also be treated when it gets where they are going to.
All right. I know you talked about the markets being deregulated, but I'm forced to ask if there is no such thing as consumer protection. I understand the whole gimmicks. I mean, it's competition and all of that. But how did it happen for so long without being checked that Nigerians had to pay so much? I mean, nothing has materially changed. Not so much has changed. All we have is Airpeace coming on board, and Naira hasn't appreciated so much that we're seeing so much difference. So, I mean, shouldn't we begin to talk about fair pricing? Or it's deregulated, but then shouldn't we look at how these prices are arrived at the end of the day?
Perpetua. Did I get right?
Yeah, sure, you did.
Sure. Yeah, Perpetua. In the bilateral service agreement, you have 21 slots. British Airways is using 14, 7 into Lagos and 7 into Abuja. Virgin Atlantic is using the remaining 7 into Lagos. I have 21. I did not use any of my 21. Would that tell you how you're going to fix your price?
And that's what I'm saying. I totally understand that, but I'm also looking at consumer protection. When you look at the pricing from top to bottom, isn't it like ripping off your citizens?
Do you notice now that even without any prompting from any regulator, the price went down because there was competition? You had 21 slots. You did not make use of it. You don't make any effort to encourage any of the airlines to go until now when one has gotten up. So now they've only used 5. If they now use the remaining 16 slots, you can imagine what will happen to the price. So and that's why bilateral services always have that reciprocal security clause. You must use your own. You must find a way to use it, or ask or partner with somebody to use it. That's only when you have more supply, the price you will be able to determine price. You will be able to bring price down. What happened before that? There was so much demand compared to the number of seats that were available. So the foreign airlines, that's the British Airways and Virgin Atlantic, were asking that they should be given extra slots outside the 21 if they want price to go down. And Nigeria said no, those slots belong to our carrier. So you cannot have your cake and eat it.
All right. Well, just before we close, I'd like to get back to the rate cuts by I don't want to use the word rate. Let's say fair cut, by foreign airlines. While this is good for the consumers and all of that, do you think it poses any risk to indigenous airlines who probably also want to compete?
Well, the indigenous airlines should be prepared to compete. I'm also looking for a second airline, and that will join Airpeace. It's something about Airpeace alone. Because look at Airpeace. By the time the chairman told us, he said, we'll be starting up with 700 to 800 naira. We are barely 2 weeks away now. It has gone to about 1.2 to 1.3. That's about 2 weeks, just 2 weeks into the operation. It has gone to about 1.2 to 1.3. So we still need a second airline because there are 2 airlines that are supposed to be on that route. We need a second airline that will take the part of the remaining 16 slots and use it. And once these airlines operate, consumers will smile. Nigerians' pains will lessen.
Well, thank you.
So, and when they fly, you are generating more income for the country. You are generating more employment. There will be little more. The volume of funds that will be remitted by foreign airlines will be reduced. This money will be retained in, and that also increase the power of the naira. So we must work towards our own operating, and we must support our own. Not only support, you must also protect. Because the moment they leave here, they are flying the Nigerian flag, and they deserve our protection from the Minister of Justice, from the Minister of Aviation, from the Minister of Foreign Affairs, and from the Nigerian Aviation Authority. Whatever is done to them there that is unfair, which should be reciprocated here to their own airlines. Simple and period.
But I like how you talk about, using laws, the instruments of the law and all of that to address issues such as this. Thank you so much, Olumide Ohunayo, General Secretary, Aviation Roundtable. Thank you for your time on the show today.
Thank you for having me.
And in Ghana now, Ghana's inflation increased from 23.2% in February to 25.8% in March. The month-on-month inflation between February and March 2024 was 0.8%. Well, joining me for more on this is Patrick Baah-Abankwa, a financial analyst and investment advisor. Thank you so much, Patrick, for joining me today.
Thank you and good morning from Ghana.
All right, well, we see that Ghana's inflation has risen to a 4-month high, from 23.2% to 25.8%. Did you see this coming, and what were the telltale signs?
I wouldn't say I saw it coming, but beginning of the year, we realized that the price of crude oil, which was around $75 per barrel, moved a bit. And as we speak, it's around $89 per barrel. When you look at the Ghanaian economy, the cost of crude oil drive a lot of things in this country, especially fuel, transportation, and that also leads to an impact on the local inflation, i.e. food inflation. So when you see crude oil price going up within the year, that gives an indication that inflation is likely to rise in the country. Again, Ghana has a history of always having its currency depreciate the first 3 months of the year. So you always find the cedi depreciating between January and March of the year. So when you have the cedi depreciating vis-a-vis also crude oil prices going up, that is an indication that we are likely to have inflation rising in the country. So for me, these are the factors that have driven the inflation that we've seen rise between the month of February and the month of March.
All right, you've talked about some of the reasons, and I like how that you mentioned the depreciating currency cedi. You talked about energy cost and some of those other things. But let's talk about, the currency now. I want to ask you, what percentage does it contribute to Ghana's inflation basket? And maybe why, the currency is experiencing this at this point in time?
Because of our economy being fragile, the depreciation of the currency is a huge component of inflation when it comes to driving it up. Purely because when you look at the economy that we drive in Ghana, fuel are imported in dollars into the country. So whenever we have our cedi depreciating against the dollar, what it means is that the cost of fuel that is being imported in the country rises. That's one. Two, most of the things that we have in this country in terms of imported items are also done in dollars. So whenever you also have the cedi also depreciating, it means that when people are bringing items from outside to be able to augment what we have in the country, they come in with higher prices, and this also goes down into affecting every other thing that we do. Now, you asked about why the cedi has depreciated. One, as I said, because we have a lot of multinationals in this country, we find that every year between January and March, most of these multinationals will have to repatriate their profit back to their home country. And that is the time that you also have businesses that went in for goods within the festivity of the Christmas, have to now restock. So they all need a bit of dollars around this time to be able to the multinationals sending the profit back to their home country, and also businesses bringing goods to replenish whatever they lost within the Christmas season. And that also always brings a bit of pressure on the cedi. So if we are not tackling that issue, you always find out that every year between January and March, the cedi depreciates because of these two major factors that I've mentioned.
Well, talking about these factors that you have mentioned, do you think the government is doing enough to address this? Well, it looks like, we can't do so much since it's a seasonal issue. But really, let's tie that to the fact that even locally produced items and imported items, went up by 26.6% and 23.8%, respectively. I mean, I understand the impact of the depreciating currency on imported goods and all of that. But I'd also like you to speak to, factors that are affecting the prices of locally manufactured goods.
So what is happening is that because these locally manufactured goods and agricultural produce are normally produced in the hinterland, so they are outskirts of the major cities, these goods have to be transported to the cities for them to be sold. And when you have the cedi depreciating, which has an impact on the prices of fuel, what it means is that the goods that are being shipped from the hinterlands to the cities and towns that people need, the prices that ordinarily they would have incurred in bringing the goods by way of transportation also goes up. And once it goes up, it also impacts directly on the prices that these locally produced items are also sold on the market. So that is the major factor that drives the local inflation when it comes to food, especially in this country.
Well, wrapping up, let's look at monetary measures now. With rising inflation, what are the potential risks and benefits if the Bank of Ghana decides to further raise interest rates? I mean, could this dampen economic activity some more?
I am of the view that the idea of always raising monetary policy rates to be able to drive inflation, for me, it is a bit outdated. What we should rather look out for is what are the critical sectors of the economy that need support, that we can give support for them to be able to produce things at a lower cost. At the same time, cultivating some habit of people appreciating the locally manufactured goods. If we don't tackle this issue, for me, policy rate will just be a momentary tool that we are going to use. In the long run, it rather cripples businesses. In the long run, it makes businesses suffer the most. So for me, if you want to tackle the issues, the more monetary policy rate will just be a momentary policy that you are using to drive down inflation. But in the long run, businesses that are employing the teeming youth are going to suffer. So for me, we should look at how we can target some sectors of the economy to support them to be able to produce enough so that we don't have to import everything. The moment we are able to reduce our imports, the cedi will begin to strengthen against the foreign currency, and that will lead to inflation also driving down in this country. For me, that is the policy that the central bank should rather focus on than monetary policy rate always going up because we want to bring down inflation.
All right, thank you so much, Paul Baah-Abankwa, for sharing your thoughts with us today on Business Edge.
Thank you.
Well, that's our offering today, and you can follow us on social media. We are at New Century TV. You can head to our website, www.newcentury.africa. You can download our mobile app on Play Store and App Store. Till next time, I am Perpetua Fasami Peter. Bye for now.